Good morning, students. Today we are going to learn the functions and importance of capital market. We have learned about capital market. The capital market provides long-term funds. Buying and selling of long-term funds is called capital market. A place where buyers and sellers of long-term funds meet together. That is called capital market. Now let us learn the functions, or they can call it as importance also. If they ask importance or functions, the same. There are 10 points. Let us learn one by one. First one, savings and capital formation. Savings and capital formation. We know it is acting as a channel between the savers of money and the business institutions. So, it is mobilizing the savings from various sectors, maybe individuals or the the business institutions, and it will be given to the business organizations who are in need of money. And this will lead to capital formation of the country, because all the savings of the individuals will be directed towards the business organizations or the industrial organization, where they are using that money for the productive purposes. So this will lead to the capital formation of the company, capital formation of the country. The capital formation will be increased. The second point is permanent capital. All the business organization, they need permanent capital. But this permanent capital cannot be provided by the individuals. They cannot permanently give that money to someone else. They may be in need of the same money. So what they can do, they can sell it in the capital market and they can have their cash in their hand. But this capital market provides permanent capital for the industries for their productive purposes. But the savers, they can sell. So both the purpose is fulfilled in this capital market. That is another function. Then industrial growth. How the industrial growth is attained? Whenever the industries are in need of money, whenever they are in need of money, this money will be provided by this capital market for their productive purposes. So their production may not have any disturbance, wanting of funds. So actually the industries will be running without any disturbance. So this will lead to the industrial growth, and this industrial growth will lead to the economic development of the country. Because without any break or any hurdle in the production, they will be continuously producing, and the production domestic product, national domestic product will be high. So this will lead to the economic development of the nation, because almost all the industries in the country will be having their own productive activities without any disturbances. Then the next point is ready and continuous market. Ready and continuous market. So whenever the investors, those who have invested their savings in the companies, whenever they are in need of money, they can sell it, or those who are in need of money, they can purchase these shares. So they provide ready market for the funds. They can purchase and sell the securities as and when they are in need. So there is easy marketability, continuous market, easy marketability. that makes the investment to be convertible into cash. So liquidity will be there. Marketability, liquidity of the securities is possible in this capital market. Now the fifth point is reliable guide to performance. Reliable guide to performance. The performance of the companies, because almost all companies will be listed in the stock exchange. So because of this listing, if those who are performing well only can sell their goods. If their value is high only, that company's shares can be sold easily in the capital market, maybe in the stock exchange. So they will be having an eye in the performance or efficiency of the company. It will be checked often. They will not be indifferent towards their efficiency. The performance must be good. Then because if the financial position of that particular company is sound only, the company's shares or securities will be sold easily in the capital market. So it is acting as a reliable guide to performance. Proper channelization of funds. Proper channelization of funds. It is acting as a channel between the investors and the users. So it is acting as that ensures the effective utilization of the funds for the public interest, because their savings will be invested in big companies, and for their savings they will be earning interest or dividend from that particular company. So it is acting as a channelization of funds. Then the seventh point is provision of variety of services. Provision of variety of services. We have learned it is acting as a channelization, it is acting as a guide for the performance. It is acting as a channel, collecting funds, and it will be providing the same funds for the companies who are in need of money. Not only that service, it is providing some more services. What are those services? First, they provide long-term and medium-term loan to the entrepreneurs. Then underwriting facilities are provided. We know, I have explained already, I think, what is underwriting facility. If a company is going to start that issue shares, that company itself do not need to contact the public and collect that application money or the share money, but it will be given a particular bank, that responsibility will be handed over to a particular bank. The bank will collect all the money and they will hand over that money to that particular company. That is called underwriting facility. That is also done by the capital market. Then assistance in promotion of companies. Promotion of companies. What is promotion? Starting a company. From the idea, when a person gets an idea to form a company, from that time onwards till its incorporation, getting the certificate from the registrar, that is called the promotion period. So to promote a company, that is called promotion of a company. That facility is also done by this capital market. Then participation in equity capital. Equity capital, we know that shareholders. So they may buy some shares of the capital of that company. They are participating in the equity capital and providing some advice, expert advice for the company. Or again, some more services can be done by the capital market. So it is providing variety of services, not only providing a fund or maybe the loan. Then it is doing all these facilities also. Underwriting facility, helping in the promotion of a company, then participating in the equity capital and providing expert advice for the companies. Then the next point is development of backward areas. Development of backward areas. We know what are backward areas. Maybe the rural areas. It is not developed areas. Opposite of developed areas, backward areas. What is the opposite of rural? Urban. Urban areas only city areas that will be developed, but the rural areas only the backward areas. There, if the government or big business concern, if they want to start a big company in backward areas in order to promote that backward areas or to develop those backward areas, this capital market provide financial assistance. Financial assistance. If a person or the even government itself, they are going to start a new project in the backward areas, in order to develop the backward areas, this capital market will provide financial assistance. So automatically that particular backward areas will be developed equal to the urban areas. So it is developing the backward areas. Then the ninth point, foreign capital. It is not only doing its service inside the country, and foreign capital also can be generated through capital market. Because nowadays we know that foreign direct investment, our government has liberalized that we have heard in Tamil, I think. Anniya Neradi Mudaleedu, that is foreign direct investment. They have liberalized many rules and regulations in order to attract the foreigners to invest inside our country. So they will, when they invest more amount in India, our foreign capital will be increasing. So it is, this capital market is increasing the foreign capital in India. Then the last point is easy liquidity. In the continuous market itself, I have explained. Here they have given as a separate point. Whenever the investors, they need to sell or to convert it into cash, they can do it so through this capital market or the stock exchange. We got very easy and known institution is the stock exchange. They can sell off their securities, maybe shares or debentures or bonds of the public sector companies or the government securities. Whatever be the securities, they can sell off them and they can convert it into cash. Okay, you might have understood all the functions. It is one of the long answer. All the 10 functions are importance. Now we will learn the next heading, Indian capital market, its evolution and growth, when it has been introduced in India and how it was grown. Indian capital market, evolution and growth. It is also 1 3-mark question answer, evolution and growth of Indian capital market. Here we can say the period between 1947, you can remember the independence year, between 1947 and 1973, this period only it is marked as the development period of capital market. When it has been developed, the time period between 1947 and 1973 is considered as the development period of capital market. During this period only, many development financial institutions have been established. Many development financial institutions. Development banks, I have taught you, development banks will come under capital market. So, many development, not banks, it will be read as bank also. All will come under development financial institutions. What are the development financial institutions? They have given some examples. They are IFCI, Industrial Financial Corporation of India. Then next one, ICICI Bank. We used to say ICICI, Industrial Credit and Investment Corporation of India. IFCI, ICICI, IDBI. Industrial Development Bank. Industrial Development Bank of India. You see the word bank also coming. Development Bank of India. All these development banks for the improvement of the industries. That's the Industrial Credit and Investment Corporation of India, Industrial Development Bank of India, then UTI, Unit Trust of India, SFCs, State Financial Corporations, SIDCs, Small Industries, Development Corporations. All these corporate financial institutions have been established in this period. So, we can say when this capital market has been developed, introduced around this period, 1947 to 1973. Between these two periods only, many industrial establishment or industrial financial corporations have been established. So, this one only strengthened the capital market. Again, in the period 1980 to 1992, another powerful instrument came into force, that is debenture. In the beginning, only shares were there. They need to buy, they will purchase shares. Shares is the equity. We can say the holders of a share is called a shareholder. They are the owners. Shareholders are the owners of a company. But it is opposite to share. Share is a debt instrument. If a company need to borrow money from the public, it will issue debentures. So, whenever the company needs to redeem those debentures, what is the meaning redeem? If they want to repay those debentures, they will repay that amount. That is called debentures. So this instrument came into force in the year between 1980 to 1992. Again, in this period only, public sector bonds were introduced. Public sector bonds. Then, many stock exchanges have been established. We have around 24 stock exchanges in India. These stock exchanges have been established in this period. So there was a tremendous growth in the capital market. Here they have established many financial institutions, developmental financial institutions. Then that debentures, that is providing long-term loan only. It is a debt instrument, means providing loan. So whenever they may repay that amount. Share is different. That is the owners, those who are having the shares. That also they can sell and buy. That is another one. Again, in this period only, public sector bonds have been introduced. Then many stock exchanges have been established in this period only. Then after stock exchange in 1988, they have established SEBI. What is SEBI? Securities Exchange Board of India. So in order to regulate the stock exchanges, since I think we have now around 24 stock exchanges, so their rules and regulations, their norms, conditions, everything will be fixed. It will be analyzed and it will be controlled and regulated by this SEBI. So we can call it as a regulatory body. It will regulate all the stock exchanges. Regulatory body. How it is the stock exchanges are functioning, that will be controlled and regulated by a body called SEBI. There is only one organization. So in India, this will control all the 24 stock exchanges in the country. Maybe the stock exchanges, physical stock exchanges, and the OTC, I have explained already, that one also may be controlled. All that counter stock exchanges, then that physical existing stock exchanges, all these have been controlled by this organization SEBI. Again, after this, new financial services, or we can say new financial institutions have been introduced. New financial institutions. We have learned already many old financial institutions, that IFCA, ICICI, all these have been developed in the beginning stage. Now at the last stage, many new financial institutions have been established. That we will learn later. Okay. So up to here, then just keep this in mind. Again, after this one, many number of committees have been established. Number of committees. They have been established to restructure the capital market, or to restructure the secondary market or stock exchange. Then some of the committees we will learn. One example. Committee on organization and management of stock exchange. So first committee is Committee on Organization and Management of Stock Exchange. That committee will be organizing and managing the stock exchange. For that purpose it has been established. Then another committee, working group on the development of the capital market. One group will be there. That group is called working group. Working group on the development of capital market. On the development of capital market. Then another one, third one, a study group. They will study. So that's why their name is given. A study group for guidelines relating to valuation and new instruments. A study group for guidelines relating to valuation and new instrument. They will value the new instruments which are introduced in the market, capital market, relating to valuation and new instruments. Any new instruments are introduced, they will study about that new instruments. We are a new study group for guidelines relating to valuation and new instruments. Another committee, a high-powered study group. That first one is simply study group. Here, high-powered study group. One or two you can learn, not all, everything. A high-powered study group on establishment of new stock exchange. Because often they increase. Last year when we studied it was 21, but in this new syllabus it has been increased to 24. So often they are establishing new stock exchanges. So there is a study group. That group is high-powered study group. A high-powered study group on establishment of new stock exchange. New stock exchange. And another committee, last one, a committee on trading in public sector bonds. Trading in public sector bonds. Not private sector, public sector bonds and units of mutual funds. We will learn this mutual fund. What is mutual fund? There I will explain. That mutual fund will come under the new financial institutions. I told you, no? There we will learn what are mutual funds. So the last committee is a committee on trading in public sector bonds and units of mutual funds. That not one, many mutual funds are there. So it will be taking care of the trading of public sector bonds and the units of mutual funds. All these committees have been established after this new financial institutions. So like this, now the recent one mutual fund you might have seen in the newspaper advertisement, in TV advertisement. It is very good and invest our money in mutual fund. It is as per many conditions and terms and conditions. They'll be advertising in the TV or newspaper. So that is the recent one. How to invest, that is also will come under the capital market, the new financial institutions. Now the evolution and growth you might have understood, I think. Today we will mark this second question, very short answer. Now very short question answer here. Short answer, second one. Explain any two functions of capital market. It is in page number 32. Functions, we have learned 10 functions. You can read all these 10 functions and you can mark your own function. Any two you can select and you can learn. either this first two or anything, easy liquidity, foreign capital, ready and continuous market, anything you can select. First two I am marking and giving now. In capital market, various types of securities help to mobilize savings from various sectors of population. Example, individuals, corporate, government, etc. Then you can write like this: reasonable return and liquidity in stock exchange. You can cut the remaining. You can write make people invest in securities. Invest in securities. 1 point. Then permanent capital. The existence of a capital market or stock exchange enables companies to raise permanent capital. There 1 point. There 1 point, 2 points. You can write it. They have asked any two or three you can write. Okay, you read and you will understand that one. You can write at least 2 points in each heading, under each heading, and no need to study all the 10 points. At least 7 or 8 points you have to learn. Okay, we will mark the next question. Third one I will teach you later. Now the fourth one, discuss about evolution and growth of Indian capital market. It is in page number 33. Here you can write. All these 3 paragraphs will be coming, 4 paragraphs. We can cut short and write. A period between, I have explained, no? That notes also you can refer and you can select some of the points from there also. The same points only I might have written there also. You will understand. So mark from the beginning till the end, and you can, from the notes that I have shown to you, you can take some of the points. We will mark the next question. Long answer question. Briefly explain the functions of capital market. It is in page number 32. Here 10 functions are given. You can select, as I told you, no, you can select at least 7 or 6 or 7 points enough, but under each heading you have to write at least 2 points. Or if 1 point is given, you have to write fully. So you can select your own points and you can write. Better select the what are given in the beginning, not at the end. Otherwise, you can select any 5 points, 5, 6, 7 points. Okay, students, you study all these question answers and you can write and send it in the group. I think many of you are not answering, not only 2-3 students only answering, and others are not at all answering. I do not know whether you are watching these videos and getting benefit. I do not know. But just to make use of your time, don't waste your time. You will feel sad in future. So better daily portions you study. Okay, thank you students.